In what seems like such a short time ago, we'll roll the clip in a second, but we have Tiff Macklem at the Bank of Canada talking about interest rates.
Our message to Canadians is that interest rates are very low and they're going to be there for a long time. We recognize that Canadian businesses are facing an unusual amount of uncertainty. And so we have been unusually clear about the future path for interest rates. If you've got a mortgage, or if you're considering to make a major purchase, or you're a business and you're considering making an investment, you can be confident that interest rates will be low for a long time.
And what you could see here is almost a scenario where Canadians could be sitting back and saying the tables have turned. After this week, the Bank of Canada moved 50 basis points higher. It's the biggest move we've seen in 20 plus years. We're almost sitting here thinking, what is next? What are you forgetting to tell us about? So we're going to be going over in this video where the big banks are at on a mortgage-like basis and where we could potentially be going in the future. But if this is your first time here, my name's Nick. Welcome to Ways to Wealth. Before we get into the video, huge favor, huge ask. If you learn something new or you get some value out of the video, hit that like button for me. I definitely appreciate that. And if you haven't already, please consider hitting that subscribe button and turning that notification bell on for similar content just like this. Wednesday was a big day. A lot of people had predicted that the Bank of Canada would raise the rates 50 basis points. We did actually come out with the same video predicting the same thing. Me and all of the other economists in Canada were kind of predicting the same thing with inflation being so high. But we got some more rhetoric. We got some more insight as to what Tiff and the Bank of Canada is seeing. So we'll pull that up right now and we'll take a look. So Macklem said that Canadians should expect interest rates to continue to rise toward more normal levels, but stressed the central bank has an inflation target, not an interest rate target. So again, they are not targeting a specific interest rate. Right now, they're kind of seeing how much they can push the interest rate higher before the economy collapses or at least takes a little bit of a hit. So they're watching that inflation number closely, and with that number continuing to rise month over month, quarter over quarter, it is better that they act now than act later. So it's so interesting to see the change in thought process, which was only 22 months ago when Tiff came out and said, don't worry if you're going to get a mortgage. Don't worry if you're a small business and you want to invest. The rates are going to stay low for a long period of time. Well, you know, it's definitely one point which we'll cover at the end, but you know, we're starting to see increases that could impact a lot of different things, whether that's your loan interest rate, businesses getting loans, housing market, etc. So with talking about the housing market, let's take a look at how quick the big five banks acted on this news on Wednesday. So we saw the RBC raise the prime interest rate to 3.2%, which is absolutely crazy. The prime rate is kind of what they base all of their loans on. Doesn't mean that you will, if you apply, if your situation isn't there, that you will get this number. It's just a base bottom line number. And then soon after RBC's announcement, we saw the other banks, the TDs, the BMOs, the CIBCs follow suit. So what does this mean on the grand scheme of things? Well, on the grand scheme of things, we can see the best 5-year fixed mortgage rates to get an indication of, you know, where the whole market is at. And you can see everything from about the low 3% here all the way up to about as high as 4% on a 5-year fixed mortgage rate now in Canada. Now, if we take a look at this, we can kind of, you know, look and see, okay, rates have definitely gone up from your 2.5%, your 3%, but what does that mean to a person that's in a mortgage? So we flip back to this article and they've kind of looked at, from a website, lowestrates.ca, that Wednesday's rate hike equates to about 2,200 per year increase on mortgage payments at the average Canadian home price at $860,000, which is kind of right in the mix as to what an average home price is in your major metropolitan areas, your Toronto GTAs, your Vancouvers, etc. So $2,200 to the already increasing effects that all the other Canadians are seeing, whether it's energy prices, food prices, etc. So it's definitely a lot to be concerned about. And I know a lot of people are looking at this right now, but where can we go in the future? I guess going back to what Tiff said, back to normal interest rates. Well, what are normal interest rates? We've been so low for so long, especially dating back to 2008, when they started to first introduce this monetary policy to bring interest rates down. So the best thing to do is to take a look at history. History is often repeats itself, and it could be a good indication as to where we could be going. So I've gone on to ratehub.ca and I've pulled the 5-year fixed rate going back 10 years. So if we take a look at where we're at right now, trending at that 2.5%, 3%, this is kind of where we've been at, especially if you look at on the short range of things in the past 10 years. So we do see an upwards trend over the past, 6 to 12 months. And, the real question is how many rate hikes can the Bank of Canada do before the economy starts to feel the pain? So normally once they start raising rates, it takes a couple of months before the economy starts to feel that. So we talked about it in last week's video where the bank rate could go. A lot of economists are predicting anywhere from like 1.75% all the way up to 2.5%. We're trending at about 1% now on the overnight rate. So the next meeting is in June. They are expected to increase it. We will see and monitor what happens from here. But realistically, what I'm thinking is we get to a certain target rate, whatever that normal rate is. I don't know if it's 1.5, 1.75, 2%. But we have seen in relation to the mortgage rate, we have seen a huge spike with rates on the 5-year increasing week after week after week. I think we do hit some certain period where, we curb inflation by people not spending as much, people being a little bit hesitant. We've already started to see a cooling off in the housing market, especially in big areas. But we could see a little bit of stabilization. I just don't know when in the short run, but over the long run for sure. So that's my thought process on it. What are your thoughts? How high do you think the 5-year fix can go? Can we see 4, 5, 6% on that? Let me know your thoughts down below. I hope you enjoyed the video. If you're still here with me, hit that like button. I hope you all have a great week in the markets. Happy trading.